Welcome back. It's all about fixed income. We're talking about the domestic debt market, how to bring it up. And we have with us here to help us unpack most of this is Johnson Nderi, who is an advisor, transaction advisor at ABC Capital. Johnson, welcome.
Thank you.
Johnson is also an enthusiast, an Austrian enthusiast of Austrian economy, School of Economics.
Indeed.
Yes. Johnson, before we get to the domestic corporate debt market, let's talk about yield curve inversion in the United Kingdom.
Right.
Is the yield curve become a better economist?
Well, the yield curve inversions of a very interesting history, and they've been used to attempt to predict recessions in various economies.
Yes.
And the recessions were, a yield curve inversion would suggest a recession in about 11 to 24 months.
Okay.
So historically, that's what we've been seeing. But this time, and this is a very dangerous phrase in economics, this time might be different.
Yeah.
And for a couple of reasons. Number one, we have seen basically the many global debt markets are largely today driven by central banks.
Yeah.
And consequently, as a result of participation of these various central banks in debt markets, the US Fed, the BOE in England, ECB in Europe, and BOJ in Japan, and even now the People's Bank of China has now become a significant bank, global central bank, and the activities have sort of impacted. What is driving yields in these global markets. Perhaps the reason why you're seeing Greece is able to borrow at 10 years for sub 2%. Why most of Europe's fixed income market, most yield curves for main governments the most creditworthy governments in Europe are trading in negative yields. So the question is, does a yield curve inversion in such a scenario predict a recession? And it's a tough question to answer.
Yeah, I agree, it's a tough one to answer.
Yes.
Yesterday I was reading some Bloomberg statistics, and they were saying that about 16 trillion worth of dollars, that's $16 worth of debt assets are negatively yielding.
Yes, that's
16 trillion US dollars.
Yeah, worth of debt and
yielding negative.
And 47% of investment grade corporate debt is also negative interest rates.
Yeah, we saw actually there's one big corporate that issued debt at sub-zero. I just can't remember the name. Some European corporate actually issued debt for the first time at sub-zero. A corporate issuing debt at sub-zero.
Yes, and you've got Austria now, which issued a 100-year bond, and at 200% of par.
It's pretty interesting times, very, very interesting time that we live in right now.
Yes. So how do you interpret the statistics? Well, we at least we know Europe there has significant economic challenges, and when you see drivers like Germany experiencing 1 quarter of negative growth, UK has been hit with the same issue. So we know Europe is weak. America, on the other hand, China, we've seen China is a bit weak as well. America, on the other hand, the ground seems strong.
Yeah.
But the indicators, the capital market indicators suggest otherwise. So that's a question: who do we believe?
Being one of the indicators is being the yield curve.
Yes, of course.
The yield curve.
The yield curve inversion as well in the US.
Yes. And just to update our viewers, the yield curve inversion is actually when the longer end of the yield curve is yielding lesser. The gap between the long-term bond, specifically in this case, typical 10-year bond,
right,
and a 1-year bond is below zero.
Yeah, it is negative.
It's-
Yeah, it's below zero. The yields of the long-term bond are lower than the yields of the
Yes.
shorter-term bonds.
So essentially, you can earn more, but you earn more by buying a 1 year bond than if you bought a 10-year bond, and which is supposed to be the reverse.
Right.
Because a 10-year bond is supposed to compensate you more for the risk you're taking, 10-year risk you're taking.
Exactly, and that tells you. I mean, what does that tell you is either the investors are wrong on on the long term, or they are seeing significant risk in short term.
Okay.
Yeah. So
that's why they ask you for that premium.
yes. And for long term debt holders, maybe they may not be impacted by the risk of holding that short-term debt holders will be exposed to.
Let's talk domestically. Even in the domestic debt market, we have our own price rally.
Right.
Yes.
Yes.
Yesterday, or rather on Wednesday, Central Bank sold a 10-year paper. Actually, they sold two papers, 10-year paper and a 20-year paper. The 10-year paper was sold at 11.5%.
Right.
The last sale of a 10-year paper was in April, which is 4 months earlier. They sold at 12.3%. So 80 bips drop on the yield.
Right.
That's a big one.
Yeah, I'm sure fund managers are very happy with that. The people who took duration risk,
yes,
are seeing significant capital gains, and also pension funds. The only question is, for how long will this last? Will we
That's
see?
the point I'm asking. Look, if I look at, sometimes I look at the fundamentals, we can look at our fundamental. You have the MPC that in the last meeting, July 24th, called for some vigilance on the consumer price side. They're essentially seeing some more pressure on the consumer price side based on the fuel price adjustment and inflation adjustment we've seen on petroleum prices.
Right.
Look at our primary deficit, budget fiscal deficit. It's quite gaping, you know.
Right.
And that means that the government's borrowing, we expect sustained fiscal aggression. When you combine those two factors and you look at where the current rates are, you get a feeling that is sort of artificial. You know? It could jack up any time.
True. But on the other side, you also have to remember that we live in a global economy.
Yeah.
And all yields globally are just trending downwards.
Yes.
All of them. So the question is, why would we back the trend?
Is it because there's it's a risk aversion? You're seeing portfolios moving from risky assets to fixed income? Could that be a play?
I think the fact that you're probably guaranteed a return,
yeah,
will probably move, and we've seen even in our markets where investors are preferring fixed income to debt. I mean to equities, because it sort of the trend sort of is in your favor, and strongly so. And of course, when you've got foreign investors reaching for yield.
Yeah.
Right. At this point, we know our dollar-denominated issues are experiencing that benefit as well.
Yeah.
I imagine if the government today wanted to issue a dollar-denominated security, it will be able to secure lower yields than it did the last time around.
Yeah. So it will be priced lower.
Yes.
Based on global dynamics. Right now.
Yes. Yes.
I just talked about 16 trillion worth of debt that is negatively yielding.
It's a good time to be a borrower now.
it's a good time to be. You can actually even for Kenya, you can refinance some of your existing dollar obligations. It's much cheaper.
Yes.
Even if you're getting 50 basis, 100 basis point lower.
Yeah. It will be an added plus.
Okay.
Yeah.
And let's talk Argentina.
Right. Wow.
Stock market. I mean, this massive wiping off of valuations, asset prices, currency crisis.
Right.
Is it not just make sense for Argentina to dollarize?
It's always been a tough question. So let's go to the beginning.
Yeah.
So Argentina, massive investor, you know, a lot of positive investor sentiment.
Yeah.
When Macri went in.
Yeah.
And
I remember that. Yes.
Yeah. And the idea was Macri was supposed to reform the historically Peronista Argentine economy.
Yeah.
And of course the quote unquote Peronista economy didn't seem to be working. which was it was a leftist government. So Macri was supposed to reform the economy, and the question was, and this is I think where investors, we really didn't know, or it wasn't very clear how Argentina would move on, or what was the best course of action. Was it better to go through shock therapy like Chile did under Pinochet, or was it better to take a gradualist approach and see how far that takes you? So Macri took a gradualist approach. So he didn't change economic policy too radically. But what that did, because essentially that meant postponing cutting his deficit, budget deficits, cutting spending and whatnot. What that did is that it sustained high government spending and high budget deficits, which were then financed a lot by
inflationary means.
So the question is, it's a tough economic and political question. When Reagan went in and Volcker raised the interest rates to 20%, and America went through a recession in the I think first 2 years of Reagan's time, and that takes a lot of courage for a politician to be able to do that. And Macri did not do that. So his gradualist bet did not play out the way he wanted.
He's lost the bet essentially.
Yes. So he didn't do what Reagan did. He was a bit more reserved in his approach.
He rolled over most of the problems.
Yes.
Essentially.
Yes, and he's lost popularity, and it seems that the left is likely to win elections again, and that was investors' concerns, and that's why the sudden stop.
The left
phenomenon.
Generally, the left has never been very popular with investors.
Yes, generally speaking.
Because it's a very socialist.
Right.
They have a socialist approach to a lot of macroeconomics.
To governance.
Yes.
I'm not very sure they are very keen on macroeconomics. So so that comes second. But unfortunately, that means then resources are not they're not allocated appropriately in the economy.
Efficiently, yes.
Right, and you've got a lot of consumption as opposed to production. And when you have a consistent trajectory of that nature, where you're constantly consuming more than you're producing, I mean, sooner or later it
will catch up.
Yes,
it always catches up.
And Argentina is a very, very well endowed economy. I think they've got quite a bit of resources. They've got fantastic agriculture. They've got industry as well. It's a very, very indeed. In 1900, Argentina's GDP per capita was equal to America's.
That's a shocker.
Yes, and in 1950 Venezuela was richer than US on a per capita basis. Yes,
because of leftist policy. But I think just the key thing, I think Argentina as a classical example, and just to our viewers, is Argentina had the primary election a couple of days back, and the leftist won.
Right.
Yeah, it was sort of a nomination, the equivalent of a nomination actually, because they're having a general election in October.
Yes. It's a precursor of what's supposed to happen.
And the leftist candidates won, and investors went frenzy. But Argentina is a classical example of how you manage currency crisis. We've had our own currency crisis in Kenya, but over the last 10 years, we have 2 currency crises.
Right.
It's always a question of, can currency unions give you protection, or dollarization, or
so you can have a current if we take the case of Zimbabwe, for example, they've been trying to they've been trying to write their currencies, and so far I don't know, 3 out of 4 attempts have failed.
It's a disaster.
Right. So the question is, do they dollarize, or do you do a currency board? Yes. Either of which is essentially outsourcing monetary policy to America?
We get back, we take a short break because the market is closed, and we come back to the discussion on domestic debt market.
Right.